Hey guys, Tank Sauce here with Traders Reborn. In this video, we're going to be going over some setups we take based off the lunch range. So go ahead, like and subscribe to our channel because we're going to be offering more strategies and tips that we use in our daily trading. These videos are shot live in our Discord, free and paid memberships where we answer questions and help develop successful traders. So enjoy. Okay, so I'm going to go over a setup that I use a lot, and it's based off of the range that's formed between the lunch time. And basically what it is, right, there's a few different ways it goes. So okay, so how it goes, let's move this over here, is this lunch hour or hour and a half is gonna form a range, right, every day. And how this works is we have our range, right, our high, we have our low side of the range, and it's formed between 12 o'clock and 1:30. I actually previously used this between the 12 and the 1 o'clock hour, but Freedom has shown me the 12 to 1:30, and I actually like it a lot better. So we're gonna go off that, and then I got examples, trades I've taken from the last couple weeks and all that. So that hour and a half creates a range, right? You get the high and the low. We're gonna wait. There's three ways. We're gonna wait for one side to be taken. It's gonna come back into range, like quick. You want it to happen quick. It'll come up, hit a FEG or something, and you can take the trade to the opposite side of the range, right? So that's the first way that you could do this. And your targets on this will be 50% of the range and then 100% of that range. The other way you guys can do this is it's going to make its range. It's going to break out of one side of the range. And when it breaks out of one side of the range, if it's going to continue in that direction, we want to see some form of displacement. So I use the 1 minute time frame. So if I get like a 1 minute big move out of it, it creates an FVG in line with the high or the low, whichever way it broke out from. I'm going to look for it to be a continuation, right? So it's going to break out, it's going to hold above, we're going to have an FEG right here, right? It's going to come back down, retest the high, and then it's going to continue upwards, right? That's the second way that this is going to go down. And the third way is it takes a range, it breaks it, comes back into range, and then it moves to 50%, and then that's it. It doesn't work out 100% of the time, but I have a really good win rate with this. This is one of my better setups that I use when I'm here in the afternoon to take. So it's not perfect, nothing in trading is perfect, but it's very good. And if you guys look for these certain things, you're gonna be able to find reasons to take the trade. So today's was a little crazy, but I pre-marked out the last week or so we could go over it. So right here, oh, one more thing too. Depending what time frame you guys use, the way you're gonna mark this, right? So here's the 12 o'clock candle, right? The high or low, it didn't make the high. The 12:45 candle made the high right here, right? Comes all the way down. We mark the high. The 1:15 candle makes the low, and if you mark this on the 15-minute time frame, you want to use the 1:15 candle. Everything I do is in Eastern time, so just so you guys know, my chart is to Eastern, and I'll talk my times in Eastern time. You don't want to mark the 1:30 candle as part of your candle. It's going to be the one before it, because if you mark the 1:30 candle, the 1:30 candle goes from 1:30 to 1:45, so it doesn't fall within that range. So you want to do the previous one. And so no matter what time frame you're on, if it's the 1 minute, if it's the 5 minute, whatever one it is, you want to make sure you're on the proper one for that, right? Okay. So, and today was crazy because at FOMC it wasn't like the greatest, but this is it. Okay, there we go. So the high formed between that time, the low formed between that time. We took it here and it kind of got a fake out. So if you were to take this trade just based off the soup of this low like I said, your first target is going to be 50%. So, and if it hits that 50%, ideally it's not going to come back down to where your entry is. So you could put it at break even after you get your first one, right? So here's the low. We took the low. It went long. It hit 50% exactly. It retraced down. It actually took the low two more times, right? One, two more times. Then we got our full move. We had the FOMC release, which wicked us down all the way here, and then we took the lunch high. So that one's complete. Wasn't like a great setup, because FOMC was kind of rough, but we were expecting more. So I'm gonna go to the other ones and show you guys these. Okay. So yesterday, what I did, and it continue working on, but I'll show you guys. Yesterday, and I like this way. I'm gonna show you guys more, but this is the trade that I took yesterday actually. Or Pam took it. I was cooking and she ended up taking the trade instead because I told her to go take it, run upstairs. So she came upstairs and ended up taking it. But yeah, so here's the low, here's the high. This is exactly what we were talking about. What happened? So we displaced above the high right here, right? I saw an FEG form between that range that I was targeting. That lines up with it right there. We immediately came back, we retested it, and you could have went long right here, and you could have taken it up, and you would have looked. I look at old highs and lows and stuff, and that's how I usually pick my targets. So I had to go way back to find these. And then that was the trade right there. You could take it like 2-to-1. Risk to reward is like a good target if you're starting out with it, or something similar to that is usually a safe target to take. So, but the way I'm gonna be doing it right here is this one, and this one actually worked out. Also, you can see it still broke above. We chopped around for a little bit. We broke above. We came back in almost to 50%, not quite. But I use a lot of different PD arrays, but this breaker would have been the one that I would have been taking my entries off of, if this is the trade that I took. And that's what it did. It hit the breaker and then it continued up the rest of the day. But yesterday was also one of those kind of rough, choppy days. A breaker? Okay. I'll show you guys that stuff after. I'm going to get through these examples and then I'll go over those things for you guys. Just remember what questions you guys want to do. So yesterday was like a break and retest day, right? And this trade we actually took, or Pam took. I didn't take it. I was cooking. But yeah. Always cooking. I messaged George too, and he's like, dang, that was an expensive meal. Like, yes. Yes, it was. So here's the next one right here that we have the previous day. High, right? 12.19, the high was formed. We come all the way down. The low was formed at 129. So we use that 129 candle. Yeah, definitely. So we use that 129 candle as the low because it goes to 129 in 59 seconds. So that's the whole hour 30 that you guys want to use. So this was also like a messy day, but it still essentially worked, right? We ended up taking this low. We chopped around for a while. We took both of these lows, and then we continued up for this. So there's going to be things that hopefully you can do. I probably would have taken this first one right away. So I wouldn't have taken it here because there was no entry on it. But as soon as I got this close above this top FEG right here, I probably would have tried to enter right here on the retrace, and then I would have got stopped out. Right, and then I may have taken another one, I may not have, but full disclosure, this probably would have been a loss for me if I took this one, but it wasn't a super clean day either. So, let's see. Monday. Okay, here we go. Monday, and this was election night, and this actually moved into the next day. So, here you guys go. Lunch lows formed at 12:09. And the lunch range high was formed at 124. Right after that, we took the high, and I'll show you guys the exact way I would have done this. We took the high right here. We wicked pretty hard. We didn't wick inside, but we did wick hard enough to where I wouldn't consider it like a good close outside of it because of that rejection. We came down, chopped around a bit, then we displaced right here, and I would have taken this entry right here and I would have put my stop up here above this high, right? And that's would have been the trade. The reason I would have taken this entry is because we got this displacement, we got this good move down, right? Below these short-term lows right here that were formed. So we closed below it with an FVG, which is this gap that I lined up. And this candle came up to 50% and rejected pretty much perfectly from that. And that's what I like to see if I'm gonna take trades off of FVGs or these setups. So I would have entered right here. We'll just use the top of the wick, even though it wouldn't be that perfect, but we'll use the top of the wick. And I would have put my stop right there, right at the high. And first target would be this 50%. And this actually, I think it's a pretty big range. It's, yeah, over 100-point range that we have total. So this first entry would have been to 50%, and it took from almost 2 o'clock until 3:30. So like an hour and a half was this range that it took, but it also worked out. And you could have just let it go, TP'd at 50%. The day ends over here. We never go any further than that, and that just would have been your trade for that time. It was almost a 4 risk to reward, right? And how many ticks was it? 97 to 59. So over 200 ticks, right? A little bit over 200 ticks. After you do it enough, it becomes kind of stress-free to where you just let it go. Because even these things right here, this wick up, all these other stuff, I wouldn't really mess with me too much, and I would just let it go because I do this, right? So what I recommend if you guys are gonna start trying this in a live account, I say go back test it first, go look through the charts, see how often it works, see how you guys can understand, see this happening for yourself, and then trade it with small size. Yep, comfortable size, so that way you guys aren't getting like chopped out or anything like that with large size or getting scared, right? Your size too big, so you're getting scared to hold it. So you want to size properly, so that way, yeah, stress-free. Yeah, size way up. So this trade would have taken, you could have, if you TP1 here and stayed in it, you would have ended up closing it out before the day was over because we just chopped around the rest of the day. But this one was from 2 o'clock pretty much up until 3:30, so hour and a half. Oh yeah, the measure. This one. So 96 minutes, so an hour and 36 minutes is what it took for this one, right? So, and like I said, the reasons I would have gone into it is because we did take the lunch high right here, right? We came in here, we displaced down right here, breaking these short-term lows. So that is the market structure shift, right? With an FVG, which is the displacement, a big candle down. And then that would have been my entry as soon as we went into this FVG. Probably would have taken it right away, but lately I've been watching to see a reaction to make sure that I'm taking it in there. So stop loss at the highs, at the high before right here, the high that took it. It was like 200 something ticks. Let's see. $232 ticks. The stop loss would have been 84 ticks. Yeah, it's not bad. All right, and then Friday I actually took this trade with Proman. He called and the phone, and we ended up taking it, but I ended up taking this one a little differently. But I'll show you guys here. So I was marking the high and the low between 12 o'clock and 1 o'clock. And right here, this was the low between 12 and 1. We took that low and we right away just shot up into this like immediately. And like I said, I wait to see the reactions in the FVGs just kind of before I jump into it, and it just kept shooting up, right? So as soon as it got up here, my entry, I think Proman got in it a little bit earlier than we did, right? But that would have been my entry on that little breaker block right there. when we retested it, right? And that's actually exactly where we had entered on it, and we took it all the way up. We were trying to take it all the way up to this high, obviously, because that's the trade, but we all ended up closing it out before. Once it got up here and it kind of stuck, and we saw it kind of start to reverse, we ended up closing it. This was Friday, November 1st. And it's the same thing. I had a wider stop loss on this one. So we took it right here. This was my target up here. And then I used the stop loss below this right here. And what I was really watching though when I was in it is I didn't want the candles to come back below this breaker right here, this little breaker that we got up above. So if we got a close below that, I would have closed it out manually on my own, but we didn't. We basically hit it and then we shot up, and that trade worked. And if we would have used the other range, which I'll tell you guys what, I've been using the 12 to 1 o'clock hour for a very long time, and I've been having great results with it. However, I was told 12 to 1:30 to check out, so I went and checked it out, and more frequently I saw that the 12 to 1:30 was offering better results, less fake outs and things like that. As soon as it closed above this guy right here, if there's multiple FEGs in the same leg, I usually don't like to take it right there. But you could have. I mean, if you were being more aggressive with it, you could. So, however your entry model is what you do. I usually use retracements and breakers to do my entry. I don't use FEGs and all that a lot. I'll use them for confirmation. But yeah, if that's your entry model and it's more aggressive, like do it. Like go for it, you know? But yeah, so that's why I took this one right here, because of that breaker. That confirmed like the move up for me. As soon as we closed up above it and we hit it and we went, that was for me the confirmation. But yeah, definitely. Like Safi, you know how to trade all this stuff too, so you totally could take it right there. All right. Wednesday. And you guys just go look through this stuff when you're doing it. Right? Go look at it for yourself. Don't just trust me what I'm saying. This is what I use. But if you plan on using it, go look through the charts and see how often these things happen, you know? And make sure you get that confidence built for yourself when you guys do it. So here was Thursday last week. Same thing. Lunch high, lunch low. Even right here, almost at 1, we formed another high, right? So, oh, this was the same 1 hour range. This was another one I took right here though, based off the 1 hour range. So same thing, it took that and then it came down, displaced down, went back up, retested this FEG order block right here, and then it shot down all the way to the opposite side of the range. So it's just the same thing. Just go through it, look. Wednesday. Okay, good. Wednesday was a break and retest, right? So we formed the high, then we came down here, we formed the low, we broke out, and we never were really able to get back into range right here, right? We stayed right here, bouncing off the lunch low, bouncing off the lunch low, bouncing off the lunch low. And although you could have tried to take it, when we came down this hard below the low, depends what price action does, but usually I would say that most often the best times that I take the lunch trade to the opposite side is when it's just a quick move out and in. Like it happens pretty quick. And then, so right here, you can see break and retest, we went down. And if I was to take, I didn't take this one, but if you guys were to take this trade, a break and retest, like I was saying, I use highs and lows. So this would have been my target over here, right? This first low, maybe this first low that was created, then this low after it. Those would have been the two targets that I would have had. And if this trade was going to continue long, probably would have wanted it to come through here because this is the leg, but potentially taking it off of here as well. The only bad thing was we came below the breaker, but I'll go over these things for you guys after. We'll get through these examples, right? We came below, we closed below, so it was kind of more bearish than it was bullish at that time. And then I got two more, and then if you guys got questions, we can go over the questions. Yep, so another break and retest right here. So this one was kind of tricky though, right? So we got the high. We came down here. We chopped around for a little bit. We didn't really go anywhere. This is pretty bullish, the fact that it stayed in the upper quadrant like this. But we took the high. We immediately came back in. If there was this actual displacement right here, right, and it actually came down and closed below this short-term low, and if it closed below this short-term low with a gap, right, we want that fair value gap, the FVG, then we can hit that on the retracement up to it and go down. But it didn't, right? We didn't have any of that stuff. So that's how you guys will avoid taking like false signals, right? Or the wrong trades. Or that's how I try to avoid taking the wrong trades, because I always want that displacement. I want that aggressive move back in. I want it to break a short-term low, right, with displacement, and then I want it to come back up and retest or come back to fill an FVG, and then that's when I'll continue to take it further down. So incorporating those things will help you eliminate losses with this setup, rather than just taking it on the turtle soup or the fake move out, right? Because you can, if you start getting really good at it, you can take that, but the probability of it working on the soup and not having the extra confirmation is going to make it a little bit more likely for you guys to get a loss, right? So that's what I do whenever I trade off at any of my liquidity levels. That's what I'm looking for, and it helps. Yeah, for sure. And I'll show you something else too that you guys can do. So the reason that I wouldn't have taken this trade, even though it, and there's a couple reasons right here, but the reason I wouldn't have taken this trade is because the way I won it is, which one was it? Here. You could do this one right here. So I'll show you this one and then I'll show you the last one. So this was on Thursday last week, right? October 31st. So we have the high and low. We took the high, right? We came back in. It looks like it's going to keep going. We took the high one more time. The reason I would have taken this short after is because after it took this high, right, we came back in more aggressively. We have a leg of red candles. Mine are purple, but a leg of red candles coming down, and we get a good closure below this low right here. This would be the short-term low that was created in the leg that broke the highs, right? The last high up. We came down, we closed below it. Once we got into it, you guys have two FVGs to choose from. Usually I'll be more aggressive with it, and I'm gonna take this first FVG because, oh dang. I'll take the first FVG entry because the second one doesn't always get hit. And it's the same idea though. If you guys take this, you want to enter off the FVG, you put your stop loss at the high, you target 50% first for a partial, and then you draw this guy, you take this guy down, right, all the way. And that's 2.32 to 1 risk to reward, and it went the whole way. As you guys saw on FOMC, I don't usually take my partials. I try to get the whole trade, but it's smart because on this setup, a lot of times it hits 50% and it'll reverse from there. So yeah, we use the fib on it real quick and see. So from the high to this low with a range, you can see it went right up to OTE as well. And I have 62, right? 0.62 to 0.79 is OTE for me. That's the whole range I use. And then 0.705 is also, that's like the dead center. You can mark it out. But look, it came right up to that 0.62. And the 0.62 is 38%. That's Dick's 38, yeah. So Dick's 38 is the 62 that I use, yeah. Yeah. So that's the same level. Like if you guys are, however you guys are doing it, Dick's 32. So that's where he would have entered this as well, right? We created this leg back into the range, then we retrace back to OTE, optimal trade entry, and go down. So see this, Guillermo, check this one out. So this right here, this move down, and these more aggressive red candles coming back down into it, with these FVGs that it left are the reason that I would have taken the trade. And I guess ICT, when he teaches it, he says you want to wait for that optimal trade entry, right? The 0.62. That's like the 2022 model. Wait for a retracement up there to 0.62, and then that's where you're going to take it. But because, like I said, when these happen like this and there's two FEGs, oftentimes I'll see the lower FEG get hit and just go down, especially if it's super bearish, right? That's what's going to happen. So that's why I would take this one as opposed to, is it Tuesdays? Yeah, Tuesdays. So right here you can see on the Tuesday chart, we didn't really get that. We did get a good red candle move down, right? But it didn't come and close below these lows right here, right? We didn't get a closure below the short-term low. So that's why I wouldn't have taken this one, if that makes sense. That's the way I confirm my entries. I mean, most of the time it's gonna work, right? Like I would say, I don't know, what's my rate? 66% is my win rate right now, and this is on the new FFN evals that I have, right? 60%, 66%, and that's what I use. So you can't really eliminate it, right? Losses, they're gonna happen, but if you incorporate those little things, you're gonna reduce them. And as long as you're trading like a good risk to reward, it's gonna end up being good for you, you know. So on this one, you could say, so that's why I wouldn't have taken this. We didn't get the displacement. We didn't get any FEG. We didn't get anything like that. In fact, it just came up right here and it ended up hitting this breaker instead, right? And it rejected as soon as it hit that and went up. So at this point, probably would have waited up until here. If price came back down and hit this, because it's obviously super bullish, this is most likely where I would have tried to take the long from, is on the retracement down here or something. I probably wouldn't have caught it down here. I probably would have caught it as soon as it started going back up again, because I would have waited for the confirmation. But that's the break and retest. You guys can see. What day is this? Tuesday, so I'll show it on the 5-minute group a little easier. And if you guys use the 5-minute, like Diamond Hands uses the 5-minute, Dick uses the 5-minute, there's a lot of guys that don't go below the 5-minute. Or maybe they do to confirm the entries on the 1-minute or see what it is. But if you primarily focus on the 5-minute, you guys are going to get pretty much the same results on it. Right? You can even see later on in the day, this is the 350 macro trade, which we can probably go over. Not today, but another time. I'll show you guys. But it just came back down. That lunch high hit. It was just really bullish, right? All day. It just kept going up and up and up and up. So if you see these bullish days like this, the chances are it's probably not going to happen. Also, you can analyze those different things in the chart. So if it's just that day where it's just going up and going up and going up, maybe anticipate a continuation rather than a trade that goes to the other side of the range. When it's a more rangy day or it's not so much single directional, it's a little bit better. Okay, let's go back to the 1-minute because that's what I trade on. So last one. Here we go. And this one would have been one of those ones that you guys would have want to take in just to 50%, right? And I may or may not have taken this with the way I enter, just because of the way it went. But yeah, maybe. So the reason I marked 2 of these is because the days I was marking the way I used to do it. But like I said, mark the high and low between 12 o'clock and 1:30. Yeah, actually my chart is like this. The way I have my chart, I have a 15-minute NQ right here. Just so you guys can see, I got a 15-minute ES right here so I can watch for S&Ts when I'm trading. I have a 5-minute NQ, and then I have a 1-minute NQ right here as well. And then those are the way that I watch my trades on those 4. But I got the 48, I got the big screen so it doesn't look all messed up. Like that. So But yeah, but pretty much the 1 minute I'm on a lot. But I don't just stay on it because you're gonna get super thrown off because it's super messy. So I really just use it for entries, stuff like that, right? The lunch low from today, yeah, yeah. I mean, I do because that's what I'm trading off of the whole time. Oh, did I not mark this one? Oh, look at that SMT I marked down there. Okay, let's mark this one and see. Oh, that's why. Haha. Was on ES. Okay, so right here, this is the lunch low that I would have previously taken. In all honesty, and that's why I marked these just to show you guys how I had been trading. But I'm gonna continue trading with it as the low between 12 and 130, um, because I like the way it works better after I went through the charts and analyzed it for myself. But even right here, and this is like really aggressive, right? Like it just wicked it and immediately came back up and started going up. So we would have got this candle and I would have looked to take a trade off of this guy over here. But we didn't really get it afterwards. We came down a little bit. I may have entered, I may not. I'm not really sure because I'm not in the moment of it, so I can't fully be honest with you guys like what I would do, right? But that's what you guys would have wanted to try to take if you were. And if you were to take this trade, you can see the 50% got hit and that was it. So a good thing you guys can do is that, yeah, yeah. And there's some traders like Dodgy and there's some other guys that use like the inversion fair value gaps a lot. They would have just entered as soon as this closed and then they put their stop loss at the low and then go up. I always put my stop loss at the low, right? So if it's a big stop loss, I'll try to size down. I won't do it. If it's a larger stop loss, or if it's a smaller stop loss, maybe I'll size up a little bit and taking it. I've been sizing up a little bit lately, and it's been going okay. But and look, right to 50%, and that's it. Even after it came back down, right? We had this huge wick right here. I'm not sure what event this was or what it was that did this, but we didn't take the low. Even the next one, it didn't take the low, and it came back up and it stopped right before 50%, right at it, and then continued lower until the end of the day. So if you guys are seeing this and you're seeing resistance getting above or below that 50%, you can kind of tell whenever it's getting past these levels, you really want to see the candles push through them with like force, right? Like big moves. You want to see it happen a little bit faster. It can sit around a little bit and then continue, but you don't want to see rejecting in like this, right? Rejecting in like that, because that would lead you to believe that that potential trade taking one side of the range to the other isn't gonna work. Okay, let me see. Show the lunch low from today. Yeah, I'll go to that right now. And then yeah, I always lower pivots, exactly. Lower highs, right? Lower low, lower high. It's even lower than the previous one. Lower low. Same things, right? You guys don't want to do it. Wait, what's up? What do you want to bother with? What happened? Okay, let me go to today's. So here's today's Guamish that we had. And today's worked out, right? It did work out. It went from one side to the other. Oh, okay. Oh, yeah, FOMC hit the order block. Yeah, perfectly. Yep. Boom. And just went right afterwards. And I'm pretty positive that it hit before the order block before it took the top. Oh, okay, for sure. No worries. It's okay. Those were all the setups I have. I can go over more. Or I can answer any questions you guys have. Like if it's breakers, I know I'll go over a breaker because Splint was asking or anything else. But yeah, order blocks are really great, right? There's less risk in taking the order block setups and things opposed to just taking the FEG. I got pretty decent at FEGs myself, but so I usually take those. But whatever your entry model is, apply it to this setup and see how it goes for you, right? Back test it and look through it. Okay, breaker, right? So see if we find a good breaker. I mean, this is a breaker right here, actually. That's also a breaker right there. So the way I do a breaker, right? A bullish breaker first is we'll have a low, I'll have a high, lower low, higher high, and then we wait for the retest right there to take it up. Now, the breaker, the whole breaker, and you can find out, you can do it however you want, but the whole breaker is the series of up close candles, right? The bullish breaker. It's going to be the whole series. So like all of these are breakers, right? Because we go low, high, lower, low, and then we higher, high, retest. So like for example, these 3 candles right here, this whole thing is the breaker block, right? These 2 green candles right here, these are the breaker block, right? Of this leg right here. So that's the right way to do the breaker. You can measure the whole thing. That way you can see how the wicks and stuff are going into it. But a lot of times people will just use the top candle, right? And even the same things with order blocks. Like this right here, just for an example, these 2 down closed candles would make the whole order block. But like I myself prefer, when I'm using order blocks, I usually prefer to use just the low one. However, depending on the setup and how I will like adjust it to fit what I'm doing, I'll use the whole leg. Like if I'm taking like a London manipulation where we're looking for a manipulation, I might try to use the whole order block as opposed to just this. If I'm intraday, I'll probably just use this, right? But just depending on what you guys want to do. But if you're just starting with it, maybe just mark the whole series of candles. Did you get that, Spuns? Or understand it? Yeah, okay. And then it's the same thing for, and ideally, right, you're going to have a FEG formed right here in the breaker. So you're going to have your series of up close candles in the bullish breaker. And then the good ones that you have, you're also going to have the FEG that forms right there, right? And that makes it significantly stronger. It's the same thing with the order blocks. If you got order blocks and they have a FEG in front of them, it's really good, right? It's a lot stronger. So this for the bearish, right? Bearish ones, it's going to be high, low, higher high, lower low, and then retest, right? And then you want to have the breaker, and then ideally, like I said, you'll also have an FEG, and you can take your entry off of either, but that just lets you know that it's a stronger area to take it from, and then you'll get that continuation down from there afterwards. Again, none of it's like perfect. Price isn't perfect, but these are the things that I use to help eliminate my losses and find the good ways to take my trades. Hey guys, that's the end of our video. If you made it this far, thank you for watching. And remember, we do have a free to join Discord so you can come see what Traders Reborn is all about. Safe trading.